While wall shaking and earthquaking may be unique to only a few parts of the country, there are hazards that can imperil any home, anywhere. And when you buy your first place and you obtain a mortgage to do it, you'll quickly learn that there are insurance requirements for you as a homeowner. So today, let's learn some of the basics about protecting your investment, that is, your home, as well as the lender's collateral, also your home, starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinoza with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your backstage pass to a better understanding of the mortgage business. Years ago, my aunt told me the story about the home they bought when they retired and moved to Myrtle Beach. In their new neighborhood, they were surrounded by other retirees, most of whom had relocated from other areas, where they sold their longtime home and then took that cash and bought the new property in Myrtle Beach free and clear. That is, no mortgage. Because they owned their homes outright, no lender required any of these neighbors of theirs to carry a homeowner's insurance policy, and some of them opted to save the expense, take the risk. Then in 2009, when fire swept through their neighborhood, some of these owners lost their homes, and those without insurance lost everything. Fortunately, my uncle was a retired Allstate insurance broker, so they carried homeowners insurance even though their home was free and clear. And even better, they escaped fire damage altogether. So with this story as a backdrop, let's start with the most basic of coverages that a financed homeowner will be required to take: a homeowner's policy, also known as a dwelling or hazard or fire policy. The main peril covered by this insurance is, you guessed it, fire. If the home were to burn to the ground, the insurance policy would have a replacement benefit that the owner could claim so that the home could be rebuilt, thereby restoring a roof overhead for the owners and the collateral value for any lender. If you own a single-family dwelling, you would often be obtaining an HO3 policy. And if you own a condominium, typically the association's master policy would cover a fire event, and your individual or walls-in coverage would be called an HO6 policy. But in both cases, these are your standard hazard policies. Because some areas are prone to high fire hazard, especially here in California and other areas of the West, a supplemental fire hazard policy may also be a requirement. Next, we have flood insurance. While the standard dwelling policy may cover some instances of rain and water damage, flood damage caused by the property being located in a designated floodplain is not covered. For this, flood insurance is required if your lender determines by way of the FEMA flood map that the property has a flood risk. Earthquake insurance, on the other hand, even in areas prone to them, is not a required coverage for most lenders. Some homeowners choose to take an earthquake policy because they know that in the event that their home were damaged by a seismic event, it would not be covered by a standard dwelling policy. Finally, there are other parts of the country, Florida for example, where windstorm or hurricane coverage may be included in the standard hazard or dwelling policy. My point here is that for every owner in every location, it's important to understand what perils are and are not covered in any policy you obtain. Any required coverage means that you must maintain a policy or your lender will force place insurance, typically at a premium expense that's far higher than you could get if you shopped. But otherwise, you're free to choose your insurance provider. And good insurance professionals will help make sure that your policy choices align with your risk tolerance. Homeowners insurance is a fact of life if you own a home and you have a mortgage. But this is not an exclusively bad thing, as my earlier story reinforces. If you have questions about your homeowner's insurance as it relates to your home loan, or any other questions about the mortgage process that will get you the financing you need, don't hesitate to get in touch at any of the links below or by calling us directly at 415-367-5959. And if you found today's video helpful, please click on the like and subscribe buttons below and we'll keep the hits coming.